What is going on, everybody? Today is another wild day in the markets. And let's specifically talk about what we talked about yesterday as a follow-up video. Talking about GameStop. What happened?
You asking me?
I'm asking you. I'm asking you what happened because if, and I got to be honest with you, when I'm right, I may brag a little bit, but when I'm wrong, I'll fess up. And our video yesterday, I said my prediction for today was pre-market, it was going to, be around 150, 160, 170. As it opened, it was going to take a dip, and I thought it was going to surpass 200. That didn't happen. Did not happen. It opened at, what did it open at? 170, I believe?
Yeah, 170 was 930. Yep.
Yeah, it opened at 170, and I mean, it just went down and went down. It surpassed 170 again, and it just kept going down. So, my whole thing was, well, okay, there's going to be a lot of momentum. There's a lot of volume yesterday, and I thought that people were just going to, the whole YOLO, FOMO, I got to get in because it's going to hit 500. And I was wrong. Or was I wrong? Because I want to share a little something with you. So I'm reading an article here. Now, this is on Bloomberg, by the way, that it says GameStop options bet that the stock will reach $800 on Friday. Hold on. Don't laugh just yet. And it says that the most active option traded on the stock Thursday was a contract betting that GameStop shares would spike to $800 on Friday. So some 52,000 contracts changed hands during the session, betting on this one-day gain of 636%, which is crazy.
And do you know what strike price was that?
What strike price? I don't know. Is it 800? I mean, you're more the options guy.
Did they say when it expired?
Friday, so tomorrow. So you're probably not gonna be able to have that, huh?
Yeah.
So you can't buy it, right? Because it's gone. Because you
no, still.
Is it still?
Still can. Let's yeah. The last one available. Look at that. Just so today, it went up 28,000%. This one. Let's see the volume. Yeah, 15,000 contracts just today.
Wow. All right. So explain this to me a little bit, right? The strike price, what does that mean? $800. So I'm buying this to say it's going to hit $800?
Yeah, that's crazy because when you buy a strike price of 800 expiring in 2 days, if the share does not hit that $800,
yeah,
it's going to expire worthless. But if you bought it when the stock was like $100 and moved to $200,
right?
Your contract gain a lot of value. For example, this today, 28,000%. So you don't have to worry about expiring worthless if you just buy it and sell it after you have all those gains here. So in that case, a lot of people did that. I don't know why they chose the 800 strike price. I guess because it was the highest available.
Yeah,
that's like a YOLO play.
Sure.
If you do options like old school, first of all, you don't usually do the weekly options. But now it's a good thing that they have weekly options. But now the people buy like options expiring tomorrow. If it does not go your way, you lose everything.
Right.
But if it goes your way, you make a lot of money.
So this specific call is 284 times what, 100 shares. That's $284 for this specific call. Is that right?
Yeah. This one you have to multiply by 100.
Right. So $284.
Yeah, you need
right?
If you 284.
Okay.
You can buy this one. But yesterday it was 28,000% less than this. So because this one was is very, very far out of the money. it's have very low value, but with the volatility, that look at that, the 600 still has like a 699% volatility. That means they expect the move to be 700% on this specific option tomorrow.
Yeah. Right.
So
Yeah. I mean, as bullish as I may be at times, I mean that's a little
yeah,
that's a
this
little
one is
rich.
like a playing the lottery. This, yeah. And
Yeah.
make sure when you buy options, always look at the open interest, because if
Okay.
it has low open interest, you're probably not going to be able to sell it. If you buy the option, you're gonna not have anybody to sell it when you decided to get out of and you might
Okay.
end up just holding the paper worthless.
Okay. So piggyback on that. So right. So 15,000 people bought, but only 3,600 people want to buy it. Is that what that's saying right there?
No, this one is the volume today, the amount of times this option exchanged hands, and this one
Okay.
is how many options is still open.
Okay.
So it's still 3,614 options still open. Somebody still have them,
Right.
And this was
Okay.
the volume today.
Okay. All right. So this is basically going off what the article is saying, right? If it hits $800 tomorrow, now again, we can't buy tomorrow because it's too late. But let's
Yeah.
say for those that are watching, and let's say that their average cost or cost basis, they got in, let's say, over 150, 200, 250, right? Like, and right now GameStop's at $109, right? So, I
Yeah.
mean, what option can you buy to, I guess, minimize your loss or basically hedge so that, you can come out on top wherever the stock goes? Like, is there any kind of option that could do that?
Yeah. If you buy the option, is you're gonna be betting on it moving to one direction. You have to go up or
Okay.
down for you to make money. If you buy a put, if it goes down, you make money. Buy a
Right.
call, if it goes up, you make money. But in the best case with option, the best thing you can do with option is to sell the options. So you have time in your favor. The person that buy the option
Okay.
is losing, the time decay every day,
Which is the
and
theta, right?
the theta, and
Right.
then you're making money. So if you, let's say, let's give a real example here. If you have 100 shares, because to sell a call, for example,
Right.
you need to have at least 100 shares on Robinhood, because they don't have like a level 4 or 5, because you need to be level 4 or 5 to sell naked calls or naked puts without
Okay.
collateral.
And
So in
and
this
okay.
case,
And naked, like what you just said, naked puts, I think is what you called. That
yeah,
means that you don't owe the 100 shares. You're just selling it, right?
yeah. If
Okay.
you're level 4 or 5, you can sell naked calls or put. That means you don't. If you can sell the calls without owning the stock as a collateral. If it goes the wrong way,
Hmm.
you have the stock here to cover to sell it to cover the call.
Okay.
And so let's say you have 100 shares of GameStop here, and let's choose. It's usually a good, like a month from now
Okay.
expiring, so you can collect more premium.
Okay.
But this one, since it's so rich in premium, so high right now because of the volatility, let's choose the March 19th. It's like the third Friday of the month.
All right.
Usually is the most volume is on the third Friday. And look at that. If you sell the let's choose one strike out of the money. That
Okay.
means this one here. The farther you go out of the money,
Mm-hmm.
the less money you're gonna collect in premium. But
Right.
at the same time, you don't have to sell your shares. You're gonna sell your shares if it goes up all the way to the
Above
strike
that.
price you
Okay.
chose for that price. So let's say you chose this one here, the 110. You're
Okay.
gonna collect 4,500 right now, just
4,500
just
bucks.
for that's gonna reduce your loss a lot. So let's say you you bought today for 110,
Right.
and so that means you spend like $11,000,
Right.
and you collect 4,500, 4,600. So that means your cost is like $60 on the.
Right. $6,000, $7,000. Right.
Yeah, so that's like buying the shares with a discount, you know.
Yeah.
So so let's look at the scenarios. If the stock goes up above the 110, the strike price,
Right.
what's gonna happen on the expiration date? If it's above 110, you're gonna be forced to sell your shares for 110. Doesn't matter if it's 200.
Okay.
You're gonna have to sell it for 110. In that case, if you just had the shares without selling the call, you would make more money if you hit 200. But if you want to be safe and just want to guarantee this money up front,
Right.
you know, you don't care because you already knew the risk of going up. And if just stay below $110, you're gonna collect this and you're gonna keep your shares,
Right.
and you can repeat for the next month, collect another. So in less than 3 months, your shares are free, you know. So like it's like
Sure.
getting 100 shares for free.
But again, with that, what you're saying right now, that scenario is you have to have 100 shares physically, right? Because again, Robinhood only does what, level 2, I believe, options.
Yeah, yeah. I
Okay.
think level 3 you can do
Level
it.
3, but level
Yeah,
4 is where you can do the naked puts.
yeah, the naked puts and naked calls. You know, naked calls.
Okay.
If the naked calls, you're just bearish on the stock because your betting is not gonna hit your strike price and you collect the money.
Okay.
But if you go the wrong way and it goes up and reach your strike price, you're gonna be forced to buy the shares and sell it to someone for the strike price. So let's say that's a crazy scenario. If let's say you did a naked call
Right.
on this $100 strike price, and the GameStop went to $800, you're gonna be forced to buy the share for $800 a share, and and you're gonna lose you're gonna have to pay the market price, and you're gonna lose the like $80,000 in that case. That's why the naked call and naked put are, they need a higher level,
Right.
and you're gonna prove that you have like a net worth to cover that.
Yeah, it's a lot more risk, right? So yeah,
Yeah.
that's interesting, man. That's interesting.
But if you don't have you don't have the 100 shares, you can sell a put, but you need to have the collateral on the account.
Okay. So
In
you
that case,
so this right now, if you wanted to do this today in Robinhood, you could, if you felt this was appropriate.
yeah, yeah.
Okay.
In this one, if you felt that you miss out on the move to the $100 and you want to get those shares at a discount, you do this. You sell a put. Let's choose the same expiring
Okay.
March 19. And in this case here, if you have to choose, like the less you go, the lower you go, the less you're gonna collect. That's the opposite from the call. The call is the higher. When you sell a
Right.
call, the highest. So they're out of the money. So this one here, let's choose a strike price. Let's say you choose the $70 strike, the $70 strike price. You check first if it has volume. In this case, we know it has a lot of volume, and open interest, which is more important. Then in this case, look, it's very nice. Let me remove this.
So $1,800, $1,900 almost.
Yeah, you're gonna get paid. That's crazy. People think it's too good to be true. You're gonna get paid almost $2,000
Right.
to be forced to buy GameStop for $70 at discount. So you're buying $30 cheaper than what it is right now,
Right.
$100, and you're getting paid for that.
And this expires March
So
19th, right? So what, in 3 weeks basically?
yeah.
It could
So
definitely go. I mean, so okay, so let's use this scenario, right? You buy this put, and then GameStop reaches $50 next week. What happens?
then it's good. You broke even, because if you bought the shares at the current price, $100,
Uh-huh.
and it falls to 50, you lost 50% of your money.
Right.
In this case, if it falls to $50, you're gonna keep the premium,
The
the
$2,000.
two, yeah, the 1900, and you're gonna be forced to buy the shares at 70.
Uh-huh.
So in that case,
So that kind of offsets the loss a little bit. Yeah, I hear you.
yeah, so you're gonna pay actually you're gonna lose like $100. But if you're gonna get the shares, the 100 shares, paying 70, and this is gonna reduce your losses.
Right.
It's like you have a cost of $51, and it's not count as a loss, because if you're gonna keep the stock now.
Right.
So now we can do you can sell the call, since now you have 100 shares. You do the first
Which you bought at
example.
a discount.
Yeah, you bought it at a discount, and then you collect again, now selling a call, since now you own the stocks,
Yeah.
So it does not it's very risky to just own the stock. Every time you want to get in a stock like this one with rich premium, collect the premium, and then if it goes up, you're never gonna get to buy the stock, but you keep $2,000 just for selling the dispute.
Right.
If it goes the wrong way, no problem. You're gonna buy the stock at a discount, so it's a win-win situation.
Nice, man. Nice. Now, and we're almost out of time, but so now GameStop again is $102 right now. AMC had a nice movement as well. I think it was over 10, and now it's kind of gone down again. And they kind of mirror each other, which is kind of odd in a sense. But you could kind of do the same thing with AMC, right? You could own 100 shares and then do the same kind of concept, right? Obviously, probably won't pay as much, and you know,
That's good, because you can do that with less than $1,000.
yeah,
To own 100 shares. So if your account is less than $1,000, you want to do the same play with AMC, you can do it. You're gonna probably need less than 500 actually, because you don't have to have the money to cover the 100 shares at the current price. You're gonna deduct the price, let's say 750, minus what you're receiving right now, because this one goes straight to your account as a credit, as a buying
right.
power.
And then the lower this goes, the more money, the more premium you get, right?
Yeah. So let's say you want to sell put here. Let's look real quick here.
Yeah, and then it's the opposite.
If you choose the $7 strike price, you collect $100 and you're gonna have to have a collateral of 750 minus the 100, so 650.
Gotcha.
And that means your cost base will be like $6.
Wow. This is good information. All right, so okay, so that's a few ways that you can basically, hedge your losses, or if you're bullish or if you're bearish, not only buying the stock, but you can also do options as well. And I just want to read one more article before we go, which is interesting, which is on Business Insider, and they talk about GameStop short sellers have lost 1.9 billion in just 2 days amid the stock's latest spike. So, I mean, do you think that's why the price went up? Is it a short squeeze, or I mean, are people because I mean, let's backtrack, I guess, a little bit, right? Because a year ago, GameStop was within the $5, $10, $15 range, and now it's at 103. And before it made this big spike, it was around 40, 50, right?
What's the question?
No, my question. The article I read, right, where short sellers have lost 1.9 billion in the last 2 days. Do you think the reason for this big spike is it Wall Street bets? Is it a short squeeze? Like, what do you think is the reason that this happened?
There's a lot less short now than there was before, so I don't think that's the main reason, and we saw a lot of volume, so it must be some institution buying, but that we're gonna find out soon, because they're gonna have to disclose that when they buy like those high volumes. But I think it's just the movements that were just ready to go through round two, so they were preparing for that, and you see that. But at the same time, a lot of people decided to take profits. That's why when it reached 200 a couple times yesterday and after hours, and today almost they tried to reach the 200, people took profits because
Come
they
on,
got
people! You
panicked
can't
because
be.
of
You
the.
got to be diamond-handed. I'm joking. I'm kidding. No,
Actually,
yeah,
most
no,
not most not did not take profit. They took loss, but they less loss, less of a loss because most of the people are holding at a 300 level.
yeah. No, that's true. That's true. Like I mentioned yesterday, that was kind of when I bought one share, and I was like, oh, let's have some fun. I think I bought at 300, but then I started averaging down. So yeah, I'm not at 300 anymore. But yeah, I mean, I honestly I thought of selling, but I'm not, just because I think there's a bit more action. And again, it could die down and go back down, but I think there's going to be that spike again eventually. What's interesting to me though is there's probably going to announce stimulus, right? Another $1,400, or not another $1,400, and that makes me curious that if people are going to go in the market and play around, because it's kind of, GameStop is kind of that high risk, high reward play, right? If you get in that to the moon YOLO mindset happens, then you never know. But it's really hard to predict. So and I
Yeah.
mean, the market today was took
The
a beating.
market scared the people today because the people only heard news of everything selling off, market collapsing, and
Yeah.
so that's they got the fear about the losing the 200 that they got with GameStop or 150. So it was back
Awesome.
and forth all day.
Yeah, and you made a good point yesterday. You said this is going to be a fight. It's going to go up. It's going to go down. It's going to go up. It's going to be like such a push, like a tug of war almost. So
Yeah.
yeah, we'll see what happens, man. Okay, well, awesome. Hope you guys enjoyed the video. Make sure you guys like and subscribe, and we hope to give you more and more videos. Take care, guys.